Hello traders, today is the 11th of April. My name is Abel Hornsey, market analyst for trading, and today I'll be looking at the week ahead. Okay, we've got a relatively busy week this week, but it's also a short week. If you look towards the end, come Thursday night, New Zealand and Australia on bank holiday, and then Europe sort of follows, as well as Canada as we go into the Easter bank holiday. That means next Monday is also going to be low volume. So anything that happens this week might sort of reverse towards the end of Thursday and then pick up again on Tuesday. Right, last night, French presidential election started. We can see here that Emmanuel Macron, the sitting president, came in at 27.6% with this initial vote, and Marine Le Pen and the French sort of far left leader, Jean-Luc Mélenchon, came in at 22%. So there's no real clear majority. Emmanuel Macron's got a lot of work to do. There is going to be market uncertainty. So the euro versus US dollar is likely to come lower based on that sort of uncertainty. You can see here we've got a trend line rising from 2016, 2017 through the pandemic lows until recently. That could act as support. We could come up, test a swing high, see if there's resistance there before coming lower. But with the war in Ukraine continuing, this uncertainty around the French presidential elections, I'm expecting to see a lower low in the euro. And if I look to the calendar, look to tomorrow, we've got a sentiment indicator from ZEW economic sentiment and German ZEW economic sentiment looking to come in a lot lower. So that's going to put pressure on this euro versus US dollar as well as all the other euro crosses. Right, going back to the economic calendar, Bank of Japan Governor Kuroda spoke this morning saying that the Bank of Japan are likely to keep ultra loose monetary policy for longer and that they're willing to do extra if needed. If there's going to be 2% inflation, that's mainly down to the high energy prices. So if we just look to see what's happening with the yen, we've got the dollar versus the yen parabolically going higher. So if you're trying to short the dollar versus the yen, like 93% of the traders on this platform, then you're getting crushed. Your stop losses are probably above the 2015 highs here, maybe even the 2002. And then we've got the swing high from the 2002 year, around 135 as a target now. So looking for the dollar versus the yen to break out, retest continuation higher above the 125, 126 level. Basically because the Bank of Japan are going to keep monetary policy super loose for a lot longer by the sounds of it. Going to the economic calendar, US dollar CPI month over month looking to get higher. If it comes in much higher than expectations, then that's going to add fuel to the FOMC expectations of a 50 basis point rate hike over the next couple of FOMC meetings. Obviously, we haven't got a meeting in April, so we're going to get choppy markets up until May. We do have FOMC member Brainard speaking tomorrow. So if we do get a move in the CPI data, move the US dollar tomorrow, then we could see that sort of come back a bit into the range ahead of the FOMC members speaking, and especially this 10-year benchmark bond auction. If we get a move in the bonds that's unexpected, then you have to expect the US indices like the Nasdaq and the S&P 500 to also move as well. So if you're looking to get into a trade, maybe wait until after 6 p.m. tomorrow. All right, Wednesday we've got the start of the central bank statements and rate decisions, starting with the RBNZ, their official cash rate looking to go by 25 basis points higher. Obviously, RBA said that they weren't going to change their rate as such in the near future, but they have removed the patient wording from their statement. So market thought that the Australian dollar would start to correct higher in anticipation of a rate hike. Obviously, the New Zealand dollar has been in a rate hike cycle for a while now. Expectations for this 25 basis points are kind of come in, keep supporting the New Zealand dollar. We look through, we've got UK CPI year over year, and there'll be month over month data as well. So looking for early morning trade in the pound, especially if we get higher inflation data. And that's mainly because of Brent and WTI being elevated still. So all central banks will be looking at what happens with energy. Prices of sort of UK energy have gone through the roof. Energy bills have doubled. We've got disruptions with petroleum depots at the moment in the southeast, so there's a bit of a shortage as well. So at the moment, we're looking to keep Brent prices higher. Don't really see it coming down towards 80 unless we get some sort of demand destruction. Yes, we did have a bit of a drop down because of the strategic petroleum releases. That could have some sort of factor to the downside. But at the moment, everyone's expecting CPI and things like that to keep going higher across Europe, UK, US, and even Japan. And so Bank of Japan governor speaks again, probably going to reiterate what he said this morning. So not expecting the yen to accelerate lower because of what happens on Wednesday, just a continuation of what's already started. Then we have US PPI and core PPI data, looking for that, for prices to come in higher again. That would have some sort of effect on the US dollar. The US dollar index itself has swept the 100 level, came into this supply zone from May 2020. There's obviously still some supply out there. We haven't been able to get through the highs of 160 cents. We sort of saw a sell-off on Friday. If Friday's low holds as resistance, then maybe we come back through, test this imbalance area here down towards the 98 and 50 cents, maybe a little bit lower. If it gets through that, there's a double bottom with liquidity here between 97.5 and 97.75. All right, going back to the economic calendar, the second central bank rate policy change is likely to come from the Bank of Canada. They're looking to raise by 50 basis points, so that's what the market expects. Obviously, with the Fed likely to raise by 50 basis points over the next couple of meetings from May, the Bank of Canada and other central banks will start to probably get more hawkish as well, as they seem to kind of all wait for the Fed to come up with their policy, and then they sort of adjust accordingly. And we also have the 30-year bond auction. So if you are again looking to get into a move based on what happens with the US PPI and things like that, especially in the US assets, maybe wait until after 6 p.m. and into the close, because the market generally gets a bit quieter ahead of these type of auctions before repricing. Right, moving into Thursday, we've got Australian unemployment rate. That's probably not going to move the Australian dollar that much, because we know that employment in Australia is doing really well at the moment. We do have the ECB, the third bank to come up with their rate decision. Expectations are for no policy change. However, we have seen ECB members start to talk more hawkishly about rate hikes in the future, or the near future. So if we get a hawkish or perceived hawkish ECB press conference from Christine Lagarde, then that could support the euro for a little bit. But then we've got also the US retail sales coming in 0.6%. If that was to come in worse than that, then that would be bearish for the US dollar. If it comes in better than these figures that we see here, then we're seeing dollar go higher, and then probably the euro get crushed based on that. We also got on the US side initial jobless claims, looking for those to rise slightly this week. And then we've also got preliminary University of Michigan consumer sentiment. That's looking to dip slightly. But overall, I think US is going to be supported based on what's happening around the world, really. So that's kind of it really for this week ahead. Obviously a busy week, mainly central bank heavy. Going through the rest of the markets, the VIX volatility index is coming down towards the 20. It's definitely nearer the 20 than it was near the 30. So volatility is lower, expecting the ranges to sort of compress rather than expand as they were. Definitely want to see slower moves. The US 500, so the S&P 500, less than 40% of companies within the NASDAQ and just under 50% of companies in the S&P 500 are trading below their 200 EMA. So whilst those two indices have the majority of their companies below the 200 EMA, I'm expecting to see this impulsive move that we saw from mid-March all the way through to the sort of last weeks of March get retraced. So I would like to see essentially a higher high and then a higher low, but some sort of value to be found a little bit lower before we make another push to the upside. Obviously, the more companies within these indices that trade below their 200 EMA, the Apple and Tesla and things like that can't keep everybody up. So maybe we get a move to the downside further if we get worsening conditions elsewhere in the markets. Looking at the UK 100 though, that looks like it wants to go higher, break through these highs, and then potentially take out this swing high for the 24th of May, 2018, and see if we can test that 8,000 mark. It's a really impulsive move to the upside. There'll be a lot of stops above the February 2022 highs. And yeah, I'd expect to see an acceleration through these swing highs, through the 7,800 towards the 8,000. German DAX though, lower lows, lower highs. We need to see a break higher. You know, we had this descending channel. Maybe we break out of the 6th of April. If we get above that, then yeah, maybe we take out this high, and then we've got higher highs, higher lows. But at the moment, it looks pretty bearish. It looks like the 15,200 is the resistance level. Yeah, we need to sort of see sentiment and things like that in Europe and Germany get higher. But with the moves in Ukraine and this French presidential election acting, you know, with uncertainty in the markets, it's going to be quite hard for sentiment and German indices and things like that to go higher. So pound versus the yen, that was a trade I was looking for on the 6th of this month. So if we just go to an hourly, we can see that on the 6th of April, I was looking for a breakout to the highs. We got that by, you know, based on what happened with Bank of Japan this morning. So big push up to the upside, going to move the stop now up and below a balance area, and then start to sort of see if we can get some higher lows, higher highs. See if we can take this high here up to 165, that'd be good. Obviously, if you look through all of the yen crosses, there's still a big percentage of the traders on this platform looking to go short, and you know, a pair against the yen. So they're trying to go long the yen, but with loose monetary policy, the yen's getting crushed. Dollar versus the CAD. Bank of Canada obviously looking to raise rates. Brent and WTI holding at elevated levels should see the Canadian dollar sort of be supported. But at the moment, dollar CAD found a little bit of support around 125, well, 1.257, got this quite heavy tested 1.262 now. Looks like there's going to be liquidity above there. So maybe the dollar goes above that level. So dollar CAD goes higher. Obviously, that gets reversed if we start to see the Canadian dollar rise on interest rates and also higher energy prices. Gold, however, been in a sideways sort of channel since mid-March. Got some liquidity around 1891. We've got some liquidity around 1965. The move was into this range, came from the above, so came off the 2000s into the sort of mid-1900s. I'm looking for a continuation to the downside personally. So if you are a mean reversion sort of trader, around 1960 is a good place to take a short, put your stop above here. Obviously, you risk it getting swept, but if the sellers are in control, like I think they are, then we don't test that high. We come down and test these lows. Obviously, if you want to wait for if I just put up, so you wait for a high, a low, a lower high, a break of market structure, and then you can start to look for, you know, further moves to the downside. That's probably the easiest way, rather than risking putting a stop up here, you know, without sort of seeing a further break of market structure to the downside. So at the moment, gold is affected obviously by US dollar. The US dollar might come down based on profit taking at 100. That would give the gold reasons to go higher. We have got the double top obviously around 2070 itself, so liquidity is up there. If dollar was to suddenly come crashing down, gold could go and test up there, definitely. That's kind of what I'm seeing at the moment. Looking for, a busy week really, compressed into a few days rather than the full week, and then wait for next week for maybe a repricing. All right, good luck this week, and I'll speak to you again tomorrow.